Let's talk about this Treasury market. There seems to have been a disturbance in the force with that terrible 7-year auction that we saw with demand so unbelievably low. All of a sudden, it appears that interest rate spike is upsetting the markets. Even though we're getting a little bit of a rebound in the stock market here on Friday, that's probably won't last long, and this interest rate uptick is a concern. Of course, we live in this world that's built on debt, fiat currency. Fiat means by government decree. They say it has value, and that means that they can do anything they want with it because it's government decree. The market that we're living in right now, the economy we're living in right now, built on debt. It's a world we're going to hand over to our kids and grandkids. I'm always extremely critical of this, and it is so annoying. Here are the 4 people responsible for this Fed that we have right now. Of course, look at that young Greenspan, the activist Fed right there. He created it, and that was followed by Bernanke and Yellen and now Powell. Somehow Powell has just fallen into this, and now that we have a Treasury Secretary of Yellen, quite a team where they can just keep growing the money on that magic money tree that you see. This debt bomb could explode at any time if it's not exploding already. Look at that money growing on the tree. MMT, could you ever believe that could be adopted here in this world? Well, that's where we are right now. The perpetual motion machine. You can grow all the money you want on these trees and it'll never matter. Well, until all of a sudden the bond market can't take all these issuances anymore, and that's what you end up with. This is a situation here that I believe that what we're seeing is the beginning of the central banks, and specifically talking about the US central bank, losing control of the market. And is this debt bomb exploding? Is this 7-year auction the beginning of that? How could they possibly believe in that magic money tree that keeps growing as much money as they want to print? Well, enough of that. You get the idea looking at that. And what we're going to do right now is we're going to look at some charts as we look at the Treasury market, look at interest rates, and we'll look at the TLT. Which is the 20-year bond ETF, which a lot of people trade, so we thought that was the right one to look at as we get into the charts. Here is the first chart that I want to show you right now, and that is the 10-year Treasury index yield. And you can see we're looking here back to about 2000, so we're looking at 21, 22 years. Let me explain this chart to you. I showed this chart back 2 months ago when we did our year-end show and talked about the fact that we had projected at that time that interest rates would go up to 1.5 to 1.9% by 2022. You can see that right there. This was all on the chart. Let me explain to you what we're looking at. These are cycle brackets on the bottom for those of you that are new to our style of analysis. Well, where a small cycle or minor cycle and the dominant cycle bottom is where you often get big advances. You can see that here. We created green zones in here so that you could see that that's where you get these big upside moves in yields. And we thought that it'd be 6 to 28 months, which is a long range of time that you get these advances, and there are at least 50% retracements of the loss. So we had projected coming up here to about 1.9%. But the truth is that if you look at this downward channel right over here, that's 2.5%. And there's a possibility that it will follow that track right over there. So let's just take a closer look in here. As you could see that we had, here we were at the end of the year saying that it was likely to have that kind of a move, and it happened exactly. We declared a bear market here in the Treasury market, and it is clear to us that that's what we have. The Fed is no longer going to be able to push these rates down for any period of time. They will potentially try yield curve control. They're not going to be able to do that, but we are in this rising period for yields that we believe is going to go right into the end of the year, and it is possible we will see 2.5% as yield. Now we say possible. Our target was 1.9, and we think we're easily going to get to that target sometime this year. I'll show you a little bit more about that as I look at the TLT chart, and I think you will find it extremely interesting. So here is the weekly chart in TLT. I'm going to zoom out a little bit here, and you can see the cyclical patterns in here. There are 3 cycles in each of these what's called harmonic families. If you want to learn about cycle analysis, please go to askSlim.com and go to the workshop page. And we have a lot there that you can learn about by watching a little video there. So there are 1, 2, 3 cycles in each of those harmonic families, and right now, how these measure out are 22, 44, and 88 weeks. 22, 44, and 88 weeks. When there is a nesting, you get a pretty big decline, as you see right over there, and it is moving down into the next nesting. 2 cycles nesting here, 3 were nesting right over there, and that's where you get the biggest period of risk. We had talked about, this has been here for a long period of time, that January through March were the biggest period of risk, and that's essentially what we have seen right in here. As January through March, we're getting this, well, right now it's February, big decline. We are projecting down here to about 134 in the TLTs, which is this super major 61.8% a fib extension. What that means is that it's taking a measurement from way back here at an important bottom, and that's really the target right over here. And here in the middle of April is where that target really looks to us like it's pointing to. So when you look at these bigger patterns, and that's this one right over here, so because this pattern right over here, that blue one, is already negative, when it broke underneath this level at 153, we warned that it was a major top in place. It suggested a bear market, and you got this big break. I want to make sure you could see that very clearly, that below there suggested that it was a negative market and you'd get a big break. So now what we're looking at now is the bigger pattern right in here, and what we want to do is see the date, and that takes you out to 2022. What that says to us is that the bear market is on, and the bear market in the Treasury market will go into 2022 at least. And if that's the case, we're going to see much higher interest rates. And if that's the case, well, probably the stock market is not going to like that. And of course, if you look at our year-end show, we talk about the stock market entering a bear market at some point this year, and that's in alignment with what we're looking at here. So the weekly patterns suggest a further decline for about the next month, and then a rebound in here in the Treasury market. I'm going to show you the shorter term pattern right over here, and there was actually a minor bottom due right over here. It's a little bit late, that's why it says shift, and what that says to us is that you're likely to get a rebound now as the stock market begins to struggle, and this rebound takes you up to about 146. If the stock market gets hit hard, that would be where it would go. But then we believe in this resistance zone is where it fails and then begins to move down again. So a minor couple of weeks potential bounce here in the TLT, but really that's dominated by this big negative situation right over here. And I want you to see our momentum indicator, which turned negative right at this point and has been, it went flat here and then negative again, and that has been a fantastic indicator on the weekly chart. And this is our indicator here on the daily chart, which on the bottom is this is our slim ribbon indicator right in here, which is the best momentum indicator you'll ever see. And add to that the signal indicator, the slim ribbon PO, and it continues to give you the sell warnings that you can see right in here, and this has been fantastic. So TLT has been exceptionally negative. If you want to get the slim ribbon PO, you have to be a level 4 member and have Thinkorswim TD Ameritrade. So you can open up a TD Ameritrade account through our website, and then we get credit for that. So decline in the Treasury market we're looking for over the next month that we see, and any rally that we get now in a rebound is likely to be temporary, and then interest rates moving up again, or the treasuries moving down again in a very, very significant way. For the time being right now, the worst may be over for the bond market as we look at this and that temporary bid as this safety bid comes in. But then again, into April, the treasuries could move down very sharply, and that could hurt the stock market. We'll talk more about that moving forward. This is our Level 2 trial membership. We are starting this right now for new subscribers. This will not last long, and this is the last time we will have this pricing right now. What this includes is the stock index report live stream that you can see. What that is live right on your computer. You don't need a special platform, of the S&P 500, NASDAQ, and Russell. I'll show you that in a moment. Our stock index report, which we put out every day, the snapshot, the SIR, you'll get that every single day. You'll get our weekly stock index report, our weekly ETF review, Slimulator momentum tracker, which is for position traders and investors, over 1,000 different stocks that you could look at, ETFs, with our algorithms built into it. With momentum conditions, you're going to see fantastic stuff in there. Just amazing. You'll get our complete library, 600 plus videos in 9 categories that I've done, teaching all kinds of aspects and showing all kinds of analysis in the stock market, and our new trader workbench for trade planning. Absolutely amazing. What's more amazing, you'll get all of that for $22.50 the first month. There are even bigger discounts if you take quarterly discounts. How can you possibly pass this, especially if you're an active trader? Just go to askSlim.com, top of the main page. You'll see the special link there, and you'll be able to sign up for the 1 month or for the quarterly. Or if you have questions about that or have an issue with that link, then write to Matt at askSlim.com. Let me show you just some examples of what is in here. Just absolutely mind-boggling. This is the SIR live stream. Now, this was from the 24th. This was from Wednesday, the 24th. And this is for our intraday charts, really for short-term trading. These are 15-minute charts of the S&P 500, the NASDAQ, and the Russell. What it has on here is what we call our reversal scout. This helps you with your directional decisions. And when it turns up, which it did the day before, you generally get upside moves. You're going to get our resistance levels right in here, and you're going to get our, these are called acceleration zones, the yellow ones. The probability when they enter the acceleration zone that they will continue is extremely high. You can get the numbers from that if you want. And once it gets in there, you can see it just explodes through. This is how you catch the big trades. And sometimes when it dips right into the support, as you could see right there and right there. Just absolutely great. And you can also see which are the strongest and weakest of these indexes, which was really clear as the NASDAQ was the weakest and the Russell was the strongest. And you could see that. It's incredible. That is what you saw on the up day on Wednesday. How about the down day on Thursday? Let's take a look right over here. And yes, what happened was we got this early downturn here in the reversal scout, and it went down all day long through all of those zones right over there. Just absolutely incredible. Through the acceleration zones where you catch the biggest trades, and then got into this area, but it was late in the day and couldn't even turn around, as you can see that. So just fantastic information here. How about what's going on today? Let's put it up live right now for you to see. Here you go. This is now live on my screen. And we started out the day choppy, moving down, but then when the reversal scout turned up, you can see what happened, and it came up right to resistance, and you're getting some resistance right over there. You get the NASDAQ moving up through those acceleration zones. Beautiful. Hits the resistance. Now pulling down. But you could see what's going on. What's the weakest index right now? Clearly the Russell. So if you wanted to be doing a pair trade, well, you would probably be buying NASDAQ today and shorting Russell. If you wanted to just buy and you didn't know which one, well, you could see which is the strongest one in here here today, which is the NASDAQ. Just absolutely fantastic, in resistance right now, failing from resistance, getting through the acceleration zones, hitting resistance and backing off. If you're a short-term trader, I mean, this is just unbelievably fantastic information when you look at that. So that is a look at the live SIR live stream, and you can have this right on your charts. Just absolutely fantastic, amazing. Here is the library, 3 new videos every week, 9 categories, over 600 videos. I'm not going to read it to you. You can read it, but just incredible things. You can see Trader Psychology, got lots of great things in there about how you can deal with personal issues that may be getting in your way of success. So just unbelievable stuff, including Future Speak, which we do every Wednesday, our certainly most popular member video. That's what's included. This is the only until March 14th. So this is essentially about 2.5 weeks. The final opportunity at this price for all of these great things that you're going to get. You saw that, $22.50 for a 1-month trial, quarterly discounts, bigger discounts. Go to askSlim.com, top of that main page, and you can sign up right there, or questions right to Matt at askSlim.